Hey all, welcome back to the channel, Fully Invested Fi. Feels good to say that again after a 90-day hiatus from the main channel. As of later today, all my strikes will be clear, so I feel comfortable posting on the channel again and not risking channel deletion. From the thumbnail and title tests that I've been running on the companion channel the last couple months, I think I've landed on a good formula to hopefully not trip up the faulty AI flagging algorithm anymore. From now on, I'll be avoiding putting any numbers in the titles, generally. No portfolio values or monthly income in the thumbnails, unfortunately. I'm really sad to lose those, but hopefully you guys will understand, given everything. But yeah, I think that's what may have been tripping things up, combined with certain language in the titles. So yeah, I want to thank everyone who has stuck with me through this turbulent time across both channels. And really, I look forward to growing the main channel even more this year. Kind of got halted a little bit last year. So yeah, this will be the exclusive space to follow along my main taxable portfolio that contains my high yield ETFs and growth stocks that'll help me retire early. On the companion channel, where I was posting the last couple months, Fully Invested Fi Labs, going forward, I'll only post about my retirement accounts in there. So yeah, just my Roth IRA, my traditional IRA, things like that. I'll also eventually post about my mom's retirement accounts and how I've helped her retire after a layoff that happened last year. And I'm using high yield ETFs and such as well. And also just kind of maybe some general early retirement thoughts and like how I'm thinking about it and what I might be doing and like how I might be quite still working, but doing something totally different, right? But yeah, that said, we have a jam-packed video today. We'll go over the usual portfolio performance from the last couple of weeks since I missed the last week, dividends received, general portfolio updates, and as a big surprise, I'm going to talk about the release of my very requested portfolio tracker spreadsheet. And also, and this will cap it all off with a finance video of the week as usual. First things first, of course, a little disclaimer. This video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin like I am, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. So yeah, if we pop over to the usual monthly flow chart here, and yeah, I mean, given that I'm kind of like rebooting the channel in a way in the new year after this 90-day break, I figure I'll just go over this full thing today. And not as in depth as the video that I do, but like, yeah, just go over the whole chart here. So really, this is the chart where how I fully live out of my Robinhood brokerage account, and I invest 100% of my paycheck. And at this point, there's quite a few people doing this now. So for me, I think what's unique is that I'm just radically transparent about everything, right? Like you see my Snowball chart, you see my investment sheet. I'm just showing everything that's behind the scenes and like how I'm thinking about stuff, and no numbers are hidden, and I'm not paywalling you to see my numbers, right? You can kind of just see it all for free. You see all the links below, you can follow along. How this works though is that I invest 100% of any W2 paycheck that comes in. So that includes my W2 paycheck, my business income, cash back from credit cards, things like that. So at a minimum, I'm investing 10.8K a month. 100% of that gets transferred to my Robinhood taxable brokerage from my spending account. And that gets split into two buckets. So $4,000 roughly goes to growth and dividend growth stocks and ETFs. So things like QQQM, SCHD, Apple, Microsoft, Costco. Those generally get quarterly dividends, and those are all on drip and just reinvest into themselves. So that's always compounding, right? This is essentially the portfolio's growth engine. So this is how I'm kind of countering things like NAV erosion that happens on the high yield side of things. And then there's the high yield side, which I roughly put in 6.8K a month. And that's a high yield income ETF. So things like XPay, WPay, YMAX, ULTY. Yeah, HOOY is gone now. I'll get into that today. But yeah, roughly this gives me anywhere between a 30 to 50% blended yield, depending on the week. And that's kind of generating a snowballing monthly dividend that's growing at $300 a month. And maybe closer to like 150 or 200 a month. And really that deposits to the account, and that deposits to cash and pays down the margin balance. So this keeps growing. Right now, this is actually an old number that would need to update. But yeah, the idea is that everything stays in the portfolio. Nothing ever leaves, right? And then what happens is that I borrow the full value of my assets on margin at a cheap 4.5% interest rate. So really cheaper than my mortgage. My mortgage is at 5.95%. And yeah, that's what pays for my monthly expenses. So that right now, that's roughly $9,000 a month. So say I'm getting like $5,000 of monthly dividends are getting deposited, right? That's basically net is what's coming out of in margin, right? So $4,000. So yeah, that's kind of like the flow that I'm using every month and that I show in my full paycheck investing videos, right? And yeah, the idea is that that gap between my monthly expenses, my monthly dividend is going to gradually go down and then eventually eclipse it. And then I'll pay down margin a lot more, right? So I'm hoping to rinse and repeat this until I'm 40 years old and hopefully hit early retirement by then. So yeah, that's the whole flow there. But yeah, let's just dive in here. So if we pop over to Robinhood and take a look at the numbers this week. So good week overall. So today ended the week strong, was up 1.03% or $1,588. If we go on the week, I'm up 2.17% or $3,309.84. On the month, I'm up now 1.15% or $1,767.35. On the 3 months, I'm down, given that like I still have like the dip to make up for from October and November. This was a big dip from October and November here, and still recovering from that. But year to date, starting the year off strong, so I'm up $2,718 or 1.78%. And on the year, doing good there too. Since I started in Robinhood, since I transferred over from Fidelity, I'm up $10,522 or 7.25%. So yes, doing pretty good overall as far as Robinhood here. And yeah, a lot of good dividends that came in today, so that's why I like ended the day nice and green because of that. If we pop over to the investment sheet to kind of just dive deeper into some of those numbers, right? So if we take a look here, so these are all my positions, right? So again, nothing hidden. I'm just showing everything here. Nothing's blacked out. So if you add up all my positions, right, that basically adds up to a gross value or market value of $307,109. And yeah, I'm using a fair bit of margin here at $151,706, and which nets me the net value that you saw roughly in Robinhood, $155,402. So if we kind of put all that together along with like realized gains and yeah, total returns from dividends and things like that, things are looking like, if you factor in all the dividends and realized gains, I'm actually up $50,143 or 15.16% if you go off just the gross value. If you factor in margin, I'd be up 32.27% on like the $155,000 value. If you just go on pure unrealized gains plus the realized gains, I'm negative $15,424 or minus 4.66%. And if you go off the margin value, that's minus 9.93%. So yeah, this is a mouthful, but you can kind of see why it's important to look at total return, right? So yes, this number is like pretty negative given that like I sold some stuff, and then also like some of the high yield stuff is dragging stuff down. But given all the dividends I've received, you can kind of see how like technically like I'm up quite a bit from those, because this kind of gets deposit portfolio and stays within the system, right? So yeah, important to look at total return, especially when you're invested in high yield stuff. If we look at some of the holdings here, like most of it is in the green, as you can kind of see, especially in total return column. Some stuff that's kind of looking red. Hood has kind of dipped just under my average cost basis. So this might be one that might be good for future paychecks to keep investing in. Costco has pulled itself way out of the red. I was kind of down 10% on this at one point, but I kept DCAing into it last year, and now it's up 4.27%. SPMO has been struggling a bit this year and not having momentum, and that's down minus 1.37% or $529. UPay still kind of struggling to kind of get back to where it's at, but still investing into it here and there, just not as heavy as I was last year. ULTY, so this one, yeah, I'll get into it later as to the how and why, but you'll notice that HOOY's gone from here, and I actually took the proceeds from that and put it into ULTY, so that's why this total return actually went down a bit, just because I basically put the proceeds in there, right? Yeah, you can kind of see this. This is like everything I got from HOOY basically gets added to that, just so I don't lose any of like my earned dividends in my calculations here. So yeah, that's down 4.65%. And then Misty is the big dog in the portfolio, and that's just down a lot, both in unrealized gains and total return here. But still holding on to it, just because at the end of the day, I still believe in MSTR, and I could see it potentially still going back up. Probably not recover as much as I lost, but at least still some, right? And yeah, fine with having some Bitcoin exposure through them. So yeah, that's how it's looking on the portfolio. If we check in on like how it's split between growth and high yield income. So on the growth side of things, I'm sitting at $168,204. So yeah, that's all my growth assets combined, right? All these. And then on the high yield income side, there's $138,905 that's invested. So this $138,905 is actually generating roughly $4,464 in monthly dividends. So you'll notice that from the last video, this has gone down quite a bit, just because I actually kind of went and re-estimated all these dividends here. So I basically took the average of basically the last 4 weeks, and then for anything that's monthly payers over the last 3 months instead, just to kind of get more accurate estimates here as far as like what the payouts would be. So it's gone down quite a bit, so which is something to keep an eye on, because it's kind of going the opposite direction of what I'd want. But also that is a big reason too this year I'm going to focus a little bit less on the ones that are kind of heavily NAV eroding, and then kind of focus on some more of the anchors like QQQI, TDAC, and things like that, right? So I'm going to be tilting, say, like more 2/3 of my high yield stuff going towards that, and then like maybe a third going to the ultra high yielders like ULTY, YMAX, and things like that. So as far as the margin health, how things are looking, you can kind of see here. So you can, if we go all the way down the line, right? So you have the gross portfolio value, which I mentioned already, the margin used, minus that out, you get your net portfolio value. And then between your net portfolio value and the margin maintenance, I basically get this number by multiplying this by the gross portfolio value, right? And I get this. So this is my margin buffer. So my portfolio can fall $77,134. So what that entails is basically like Robinhood, you'll see that my margin buffer is 49.64%. So this matches like what's over here, right? But personally, I don't like going off of that because I think that's a bit misrepresentative and a bit too generous in that way. Like I want to be more conservative and actually go off the margin buffer off my gross portfolio value, because that really kind of factors in the amplification of margin. And so really my buffer is like 25.12%, because realistically what happens is that if this gross portfolio value drops 25%, that's the equivalent of a 49.64% drop given the amplification of the margin used, right? And the equity. So very important. So yeah, people that are kind of just looking at this number, I think it's a bit dangerous, because it kind of makes you feel more safer than you are. So yeah, for me, I really want to know what a real drop would take to basically bring my portfolio into margin call, right? So I monitor this very seriously and very, very carefully every week. So that's why I mention this all the time, right? And yeah, and then after with that, I have a margin buying power of $63,558. And really that's your margin total minus your margin used. So that's the gap between that is your buying power. So as you can see, I don't use my full margin buying power, right? I leave a lot of buffer here just to kind of keep my margin buffer healthy and just kind of stay well away from my margin maintenance number here and away from margin call essentially. So if you half that number, that basically kind of gives you the cash available for withdrawal. So that's $31,779. So this is cash free and clear that I could pull out from the portfolio if I wanted to, right? So yeah, that's a really important piece there, just because that's what I'm using to live out the account, right? And that keeps getting supplemented every 2 weeks as my paychecks come in. So yeah, that puts me on an equity of 50.60%. So just a little bit above 50% is a bit of a drop this week with like the tariff stuff, but yeah, we'll get into some of that later. And yeah, like I mentioned, that's the monthly income that I'm estimating right now. So roughly that's equating to like a 38.57% blended yield. And that's basically on this value here, right? The high yield income assets that are invested. So if you go off the full portfolio value, it's closer to like 18.22%, right? So I kind of like tracking both just to kind of see where really stuff is at, just because like, yeah, I want to know exactly what my investments will be yielding once I invest into the high yield stuff, right? And yeah, so that's on the sheet. So that's that. If we pop over to Snowball, so we'll see a lot of similar numbers here. Yeah, you can kind of see a further breakdown of how stuff is breaking down between like the ultra high yielders. So this is like YMAX, WPay, ULTY. You can kind of see like this is you can see the NAV erosion in full view here, even with the total return. So it's still in the red. So it's down 7.37%. My single stocks are holding up well, despite I think like really what's carrying is like NVDY and GOW really. But yeah, Misty and BTCI just got hit hard by the crypto crash last year. So that's still in the red, but being held up by the rest. My high yield anchors here are doing good. It's actually positive both in capital gains and in dividends received, right? And yeah, you can kind of see that here between XPay, TDAC, and QQQI. I've been very happy with these three anchors. So I'll be heavily investing in these more this year, as I said, in a larger proportion It's my little gold hedge that's growing. I'm throwing about $200 a month in that instead of putting it into some put insurance. So I'm doing this instead. I just prefer this. I'd rather be building up an asset rather than kind of throwing money away, quote unquote, for put insurance. But I know that's some people like using that. And after trying it for a few months, not quite something I wanted to do personally. And then after for my growth side of things, so the larger proportion is now in the growth and div growth anchor ETF. So that's between VOO, SPMO, SCHD, and QQQM. So you can kind of see how they're doing. So they're all well in the green, except for SPMO, which is a fresh position. And then also the growth single stock. So yeah, so I'm targeting kind of like roughly a 40% allocation here. So I'm pretty close. The growth single stocks are a little bit overweight. So I'll probably have to trim a little bit from this eventually just to reallocate. Probably put some maybe into my hedge here. But yeah, you can kind of see the target allocations for each that I'm kind of going for. So I want a lot more in my anchors, which I'm not quite there yet. I'm a bit overweight in my single stocks. And for my ultra high yielders, a little bit overweight there too. You can kind of see my targets and where I'm at currently. So for my growth single stocks, yeah, all of it's mostly in the green. It's actually just Robinhood that's slightly dipped in the red here. But yeah, going good because you'd expect this growth side of things to be way in the green, and it is. And that's what's helping offset some of the NAV erosion we're getting from the high yield side of things. But yeah, let's dive into the growth stuff here. So yeah, I've really been loving this growth tab here in the portfolio. So yeah, if we check year to date, actually doing pretty well. I'm beating out the S&P by $2,367 or 1.55% so far this year. So doing good. If we really check from just the performance of this last week, I can kind of see, yeah, there's a couple dividends here that haven't been reflected quite yet. So this is not quite getting it there. But if we go from here so down here, so last 2 weeks really, but factoring it all in with all the dividends and everything, just slightly ahead here. And if we pop over to here to kind of just see the actual difference. So you can kind of see here, the S&P over the month is up 0.22%. I'm up 0.65%. Year to date here, I'm up 2.68% or $4,053. And the S&P's up 1.11% or $1,685. And this basically imagines as if I think all the buys that you make are basically in the S&P instead of your portfolio. So they mirror the stuff. So that's how they kind of compare the performance there. And then if we drop down here all the way to my favorite new area here, the heat map, this is really great because it just kind of really shows at a glance what's doing well, what's not doing well, right? So if we take a look at what it is year to date, so yeah, you can kind of see here year to date, right? Yeah, you can kind of see. So one, CHD's been doing amazing this year, almost acting like a growth stock, up 6.2%, while really outperforming VOO, QQQM, yeah, all the regular suspects. This is why I invest in SCHD because in times where people are turning away from tech and kind of reinvesting into value, I like having SCHD as the anchor there and just to balance out all the very, very heavy tech exposure that I have in the portfolio, right? I know people shit on SCHD sometimes because it hasn't performed as well in the last few years, and obviously it hasn't, given how good tech has been doing in AI and everything. But there's some years that AI and tech and stuff is not going to do good, and that's where SCHD pulls up and starts doing good, right? And happy for it. Yeah, and then XPay is doing good. It's up 1% too, almost matching VOO. SPMO, as I mentioned, hasn't been doing good, down 1.2% on the year. QQM's been up 1.4%. ULTY here, nice surprise, right? This is up 4.7% since the beginning of the year. So down on capital gains, but have just gotten a lot of dividends from it so far. And yeah, that's been nice to see it in positive total return. So yeah, that's the reason actually that I sold HOOY and put into ULTY, and we'll get more into that later. Yeah, YMAX is in the positive too, beating out VOO even. Apple and Microsoft have just been doing terrible since the beginning of the year. Apple's down minus 3.7%. Microsoft's been down 1.4%. Hood has been hit hard as well, and I've been DCAing into this as well. Yeah, as part of kind of the tariff stiff that happened earlier this week, I put a bunch into Hood there. And yeah, Misty's been actually doing good since the beginning of the year as well. Google, GOW as well. Meta's been doing okay. Gold's been doing amazing too, still ripping up 8.2%. And yeah, some of my growth picks here, Take-Two and Reddit, just been going down with the tariff dips and stuff like that too. But yeah, you can kind of see at a glance how everything's looking. I really love this view. If we check from basically the last 2 weeks since I had my last update here, I can kind of check too. and kind of look at it at a glance how stuff has been doing, right? So SHD has held up good even with the tariff dips, and NVDY, WPay, ULTY has held up good. Costco, Misty, Meta, Gold has done amazing, but everything else kind of got hit pretty hard from the tariffs this week, right? So yeah, even if we isolate this to maybe just this week and kind of see what got affected by the tariffs or not. And it's always good to kind of get a view of that, right? Like you can see that Costco held up well with the tariffs. Take-Two did actually, Meta did as well. There was some news there as far, I can't quite remember Meta's news this week that pushed it up. Oh, I think it was something about ads and threads and stuff like that. So they're going to get a lot of monetization from that. And then gold held up nicely as well, IUI. So yeah, really love this heat map. Really kind of gives a nice bird's eye view of everything. I'm going to be showing this every portfolio update now. It's my new favorite view here in Snowball Analytics. So yeah, if we pop over to the dividend calendar and kind of look at what we've got so far. So on the month, we're estimating to get $4,522. So yeah, the estimates actually got a lot closer to what Snowball has been going, given my averages here. So that's been kind of good because before there was a pretty big divergence. So now it's a little bit closer matching here. But yeah, but how Snowball typically calculates stuff is that they take the last basically dividend payment and then project that out in the year. So this varies quite a bit from week to week. But yeah, as far as the last 2 weeks of dividends that I got, right? So you can kind of see here, last week got GOW, WPay, ULTY, XPay, big one from XPay, and it's kind of dividend that got readjusted based on the year. YMAX, HOOY, Misty, and NVDY. And then this week we got GOW $17.17 or 45%. 45.4% dividend, TDAC a $69 dividend at 17.33%, ULTY a $210 dividend at 70.5%, we pay at $158 or 42.2%, YMAX $128 or 43% here. So yeah, good solid week here, like nearly $1,000 in dividends, which is nice. Yeah, BTCI came in at $219.95 for at 28%. Gold came in at $10 at 12%. Misty at $59 at 74%. NVDY at $139 at 30%. So you can see how this has gone quite a bit lower, right, from where it was. QQQI at $40 at 13.8% here. So yeah, good last few weeks overall, like heavy in dividends here. If we go over to the dividends section here, you kind of really see how the relation from the current payout that just happened and my yield on cost because of my average cost per share, right? So kind of see how Misty has dropped like crazy, right? So like its current dividend is 74% based on the current price, right? But because my average cost per share is so high, right? Yeah, you can kind of see here it's $125.50 after the reverse split. My yield on cost right now is actually 17.82%. So you can kind of see how like really that dividend has like reduced quite a bit from where it was when I first got invested in it. ULTY is holding up good. It's actually, the dividend this week was 70%, but my yield on cost is still pretty high, 49.5%, which is great for like a ultra yielder, I'd say. GOW is holding up great. A big yield here at 45%, and my yield on cost is actually higher, 48%. YMAX there, yeah, this week's was 43%, and the yield on cost was 32.34%. So still holding on good for an ultra yielder. That's what I'd hope for, like above 30%, like 30-40% range. WPay the same, 42%, but yield on cost is 33% given my average cost. NVDY, yeah, it's down to like 20%, really, my yield on cost, the dividend that I'm getting, despite the 30% yield on the current price. So yeah, this stuff like this, when I see this, is like, that makes me think like, maybe I push NVDY into something a little bit more higher yielding potentially in a fund of funds that doesn't have that single stock risk, but we'll see. I'm still thinking on this one. BTCI 28% or 21% on my yield on cost. XPay sitting tight like in the 20% range at 21.2%, and I'm at 21.65. TDAC stable 17.2%, 7.3. QQQI stable 13.8% or 13.7% here. So yeah, and you can kind of see my yield on cost in SHD from the dividend growth over the years, from starting at 3.6% and I'm at 4.04. So, and then all the tiny ones from these guys, right? So yeah, important to keep both in mind and kind of see how potentially stuff might get reallocated based on stuff, right? But also I don't want to keep jumping from fund to fund. So I'm thinking through my next move like pretty carefully in that sense, right? Yeah, and that's for Snowball, right? So if we pop over to portfolio updates, you'll notice that I did sell out of HOOY, right? So you can kind of see that in my where are my trades here? Transactions, right? So yeah, I sold out of HOOY here for $1,322. And I basically put that into ULTY. And the reason why was, so one, yeah, it was a fairly small position, $1,300, right? And I've really decided after my experience with stuff so far this year is that I don't want to do any more single stock high yield ETFs. So I'm gradually rebalancing out of those and kind of putting them either into like high yield index funds like QI, TDAC, things like that, or XPay, or fund of funds like YMAX, WPay, ULTY. So yeah, I ended up choosing ULTY for the HOOY proceeds just because like generally ULTY does actually hold hood a lot of the times. It kind of comes in and out and as they trade in and out of it, but a lot of the times it does come back. So yeah, it had a pretty, as you can kind of see, pretty similar current yield, right? ULTY 68% and HOOY, I don't have any more, but it was like in the 70% range. So that was kind of the closest out of the bunch. So yeah, put into ULTY and yeah, honestly, yeah, I've been impressed with ULTY so far this year since its recent strategy change, especially from the end of November. Like, I mean, you saw for yourself here with like ULTY year to date, right? It's actually doing pretty amazing, 4.7% in total returns. So yeah, I'll keep investing to it, just not as heavy as I was doing last year, but yeah, I'm willing to see how they're adjusting the strategy and how that will fare, because it seems like we're doing a better job out of it so far. And it's just really the last couple of months, but we'll see how it goes. And yeah, like I mentioned too, like I'm still on the fence about NVDY, right? On what, this is probably my last single stock that I have here outside of GOW, yeah, which I'm just holding for basically my YouTube earnings, right? That I'll always keep. But yeah, we'll see, because it's like quite a bit of unrealized gains to realize. I'd want to ideally offset that with some gains too. But also, if I get some extra tax loss harvesting, I could potentially carry that over to future years too. So it's not that big of a deal, but I still want to think through this whole move here. And I've been thinking this through for the last few months, really. You've heard me talk about this again and again. But yeah, we'll see. We'll see, because like, yeah, it's yield on cost. As you kind of see, it's like pretty weak right now. So at least from where it was, right? It's still 28% still amazing in the grand scheme of things. But I don't know, maybe I can put it into something like K yield potentially that's at like 37% and a bit more stable, right? I've been looking into that, something like that potentially, right? Or maybe in some of my existing ones like ULTY, YMAX, or what have you. So still thinking on that. Some days really, I'm still thinking about selling out of Microsoft and Apple completely. I've already trimmed it last year, right? This is my longest held stocks for like the last 5 years, and they've done amazing. But really, when I back test it, right, back to like when I first picked them up in 2021, kind of see that like had I put them into like, so I compared against QQM, VGT, and 50/50 Microsoft, Apple. Yeah, had I put them into VGT, actually, I would have been pretty close in performance. So I would have been a tiny bit ahead, but definitely been ahead of QQM, which has been nice. So we'll see. I still think about that. Like I think of sometimes just divesting to this and just putting back into VGT, which is funny because like originally I split VGT off to put it back into Microsoft and Apple, so keep flip flopping there. But you can kind of see where it's at, right? But yeah, well, I'm gonna keep an eye on it. I'm still thinking about it. Yeah, overall, I just want to be a lot more heavier into my ETFs overall on the growth side of things as well too. It just has like a couple of select single stock plays too. So it makes it easier too if I'm going to DCA into very specific stocks too that I have less to contend with. So right now there's like all these, right? So that's like 8 to invest in. So I could kind of potentially reduce that to 6. So we'll see. Still thinking about that as well. So yeah, and then also like I mentioned in my video earlier this week, I bought the dip on the Europe and Greenland Trump tariff threats that happened earlier this week. So yeah, I mean, it turned out to be a good thing in the end. Yeah, the taco trade is alive and well. Trump always chickens out. Like literally the day after, he ended up pulling back on the tariffs because he said he reached some sort of deal with Greenland and Europe and whatnot. So yeah. The tariffs were canceled and the market kind of ripped back up. So yeah, on the day that the dip happened, I actually ended up taking like all my month-to-date dividends from January. Basically, it's the $2,755. And basically I split that between some growth and high yield stuff. So yeah, so I put like roughly 40% into high yield. So $739 in SPMO and $363 in HOOD. And then after I put the rest in BTCI, because that was down the most out of my high yield stuff. So $1,653. And there was a little $96 buy of GOW here. And this was like Snowball earnings. So yeah, again, a little perk for my Discord. You see all my trade alerts as they happen, right? And even others post theirs as well. But yeah, I had a tiny buy of Misty earlier this morning, selling off my HOOD holiday crypto. Funny little buy there. But yeah, that's the general portfolio updates this week. And yeah, sorry this video's going long, but a lot to get through this week. Like a lot, it's a video that I'm posting again on the main channel. It's a big deal. But yeah, so the big thing that I want to talk about, so I've gotten like so many requests in the comments on Discord about when I was going to put this out. And as you've probably seen over the last couple of weeks, I've been kind of doing a gradual rollout to get feedback from patrons, from Discord and whatnot. And yeah, I felt like today was a good day to kind of share this out wide on to YouTube as a whole and to celebrate being back on the channel. But I want to finally get this out there. So you can now find my portfolio tracking sheet at a couple different places here. So you have it here up on Gumroad now. It's up totally for free. And yeah, you can tip if you want, but you can also just put 0 and say you want it, right? But yeah, I just wanted to give this back, and it's free of charge with the option to tip, right? Like as I mentioned. And yeah, just because I've built this off free ones that I picked up from other YouTubers like years ago. I can't even remember the YouTuber I got mine from. And I learned so much and just built mine off of his basically, and yeah, just formatted to what I needed. So yeah, I feel like I just want to do the same. People can kind of learn from it, to pick it apart and modify it as they need, right? Go at it. So yeah, just some disclaimers here to keep in mind if you do. But yeah, you can find it on here on Gumroad. I also have it off on Patreon now, which you can join for free. That's on there with the link, and there's a little link on a little coffee link as well too, or Ko-fi link if you want to leave a tip here, just because Patreon doesn't have a good like free product that I can put out with a tip option. So yeah, just a little coffee link there on Patreon as well if you want to contribute there. Totally optional, of course. But yeah, if you have any feedback about it and use it, feel free to drop it in the comments in Discord. There's a channel dedicated to that specifically, or Patreon or whatnot. So yeah, links to that will be in the description below and the pinned comments as well. So yeah, have fun with that. And yeah, and then as far just to cap things off, finance video of the week. Yeah, so just like a little interview so Side Guitar has been doing the rounds across different YouTubers, talking about TDAX and TSYX, or T6 as he calls it. And yeah, great interview here by Dividend Stockpile about it. And yeah, he really dives into T6 and TDAX. And yeah, I've been researching these a bunch and watching a bunch of his interviews as I'm looking to maybe invest in these once the margin maintenance percentage drops on Robinhood in 30 days or so. So yeah, he really explains the funds great and goes in depth on why they pick swaps over other leverage methods. Like they really ran the gamut as far as like implementation methods, right? So yeah, I always appreciate his engineering brain behind it all the decision making behind Top Alpha, and like how relatable his story was of how he first started the fund from like holding shares and selling 0DT calls on his SPY shares. Yeah, just love how simply he explains things. And I think like for swaps, he explained it really nicely too, as far as how they work. So definitely dig in there and see how it works. Because yeah, I researched a little bit of it with WPay, and I thought I kind of mostly understood it. Yeah, just mostly through reading. So it was kind of nice to kind of just get it visually and orally to explain it quite nicely. So I think I have a better idea of how all that works. But yeah, he doesn't actually hold the underlyings of like TDAC and T-SPY really. He basically just owns it through the swaps, and that's what they hold basically, and they get 30% leverage on top of it. So of any of the returns of T-SPY or TDAC on that day. So that's how you get that leverage, and you have a little bit of cost there as well too. But yeah, I'll let you check the video to get the full in-depth thing. I don't want to summarize all that, but yeah, that's the video though. So yeah, that was a lot. Sorry for how long it was. But yeah, as usual, yeah, if you want to follow me off YouTube, there's a bunch of different ways to do it, right? I'm on Blossom Social. You can find me on there. You can see all my trades. They're a bit less transparent on Blossom. They just show percentage and stuff like that. But yeah, you can kind of see all that as they happen. So you can kind of see all my trades this morning from like selling out of all the crypto stuff and buying Misty, swap it all out. Of course, my Snowball, this is all completely free as well. Nothing hidden, all my real numbers, kind of see exactly what's in the profit, what's profitable, what's not. Yeah, I'm an open book. That's what's special about my channel. I think I'm just fully transparent about all that, not paywalling any of this. You can kind of just see it all for free. Happy to share. And yeah, and then if you want to join the Patreon as well too, there's completely free. It's really just a backup in case there's more YouTube shenanigans. You can find all my videos across both channels on here as a backup. I try to post them day and date when I post them on YouTube, so all for free. And there's also a little optional membership option. And really, this is just to support the channel. Think of it as like an additional tip jar. People did get an early access to the spreadsheet a couple weeks ago. So that's the one extra perk you get there on top of like a badge and things like that on Discord. But yeah, of course, yeah, as I mentioned, Discord. Yeah, love talking to people in between videos, answering questions. For like myself, I'm answering questions. Others are answering questions. Like there's multiple people living out of their brokerage and or not. Really, I'm open to all kinds of ways of reaching FI, and that's what I love. I'm not gatekeeping. I'm not saying my way is the only way. There's tons of different ways to approach that. So the more you're exposed to other people doing things, the better it is. Honestly, you'll be better off because you'll really just kind of pick and choose what works for you. And everyone's situation is different, right? Mine is very different from others of like the income I'm making, where I am in life, why I'm doing this. I'm doing this to like help safeguard from layoffs potentially too, given how turbulent the games industry is right now. So like that's the beauty of it, of being exposed to different ways of doing things. So yeah, if you got some value of this, if you're looking forward to following all my videos on the main channel again, like I'm so happy to be back again, as I mentioned. And thanks for everyone that's like stuck around between both channels. Really appreciate you. So yeah, give a like and subscribe if you're looking forward to the future videos. And I'll catch you in the next one. I'm back.